Hello traders, in this video I would like to recap extreme historical volatility of the last week and the importance of trading pure price and Fibonacci while paying attention to the news. So, last week market staged historical sell-off on February 26. However, when price reached ultimate bottom, no matter what the news says, market started rallying. On the news, market in free fall, on the chart price is rallying as it reached ultimate institutional bullish trend inception. So this is where buyers stepped in from on February 28th. And this is where this morning we witnessed historical event when Fed lowered the rate by half a point. S&P skyrocketed 60 points in a matter of seconds, from where Alpha Fibonacci support. However, this is a major problem. This is Alpha Fibonacci Reversal Zone you never enter into. This is where price crashes 80+% of the time. So why in the world S&P crashed another 100 points while Fed raised the rates? Because this is bullish trend exhaustion. And it doesn't matter if you trade 5-minute chart. It doesn't matter if you trade 15-minute chart. Exact same formula remain. On this historical moment, Fed raises the rates, but price collapses completely because this is Alpha Fibonacci Reversal Zone. 50-point rally in 1 minute and sell off. So if you understand the importance of predictive power of Fibonacci, you know far in advance, no matter how bullish the news is, no matter how much rates are lowered, you do not want to buy in this vicinity. You want to buy from support. And if you take a look on institutional charts, there is no surprise where S&P crashed from. So let me take you down memory lane so you can see predictive power of Fibonacci. But first, before we go to institutional levels, let me remind you what students have done this morning. Marco, second week in the course. Oil 5 points, 2 minutes after market open. Marco shares scalping only because market's extremely volatile. Jean 25 points on Dow. 17 minutes after market open, as Jean is thanking me for teaching execution in volatile markets. Brett 32 points on S&P. Traders supporting each other on historical day. Fed cutting rates. Marco another 10 points on oil, less 10.25 points on S&P. Then Marco follows his second week in the course on 10 points on S&P. Marco shares, FTI changed my point of view of the markets. And joking, 100 hours of videos. I love recorded classes. So, this is what plays out on historical morning during the most volatile market conditions. These traders understand predictive power of Alpha Fibonacci. So let me take you back a couple of years as well as last few weeks on S&P. This is bearish correction 2014, 15, 16. Market respecting critical support 1800 number on monthly chart. This critical support is bullish trend inception on weekly. S&P is rallying, reaches critical resistance. After the election, S&P reaches next target and heading higher until it reaches Alpha Fibonacci Reversal Zone 2018. When bearish correction in a play when market starts selling off. 2500 crucial support on S&P, critical. This is exact same level we're dealing with right now, traders. Do you understand that? And do you understand when S&P is selling off, but reaches crucial support? That's where S&P starts rallying from. In 2019, ultimate bullish reversals on S&P from 2350. Do you remember what this level was? On monthly chart? On weekly chart? Critical resistance 2017 becomes critical support 2019, where market rallies from. Ultimate symmetry, ultimate predictive power of Alpha Fibonacci system. So if I would take you right now to the events of the last 2 weeks, this is what played out. S&P is rallying higher up until it reaches Alpha Fibonacci Reversal Zone. This is the reason market starts selling off. This is the reason market starts going into free fall. It's a reversal zone on institutional chart traders. It's exact same thing you witnessed on day trading chart this morning. Identical meaning, identical power, identical precision. Rates are raised, but S&P collapsed 120 points. So if you're trading with institutions and not against them, and if you understand the power of price and Fibonacci, you are in excellent shape. If Marco can do it, second week in the course, so can you. It doesn't matter what you trade. It doesn't matter if it's S&P. It doesn't matter if it's oil. It doesn't matter if it's Dow. All of the students, my friends for life, they're serious about trading. You decide what you want to trade, and if you want to trade Dow, identical formula applies. When Dow skyrocketing 1,000 points after the announcement and then collapsing 1,000 points despite rates cut because of Alpha Fibonacci Reversal Zone from 27,000 to 26,000 level. 26,000 is a key support on Dow. If this support is out, you will see Dow in this area at the institutional bottom tomorrow morning again. So what is a stunning reminder of? Do not trade on the news. Pay attention to price. Respect our extended rallies. And if you know where Alpha Fibonacci Reversal Zone, you are not buying the market at the top. You're respecting what price is telling you. Marco, Les, Jean, Gary, David, all of the students know so. On this historical Tuesday, March 3rd. They are not trading randomly on the news. Alpha Fibonacci traders are strategic traders who pay attention to price, who know in advance where to buy, where to sell the markets. So if you will decide to join us, choose from the option appropriate for you. When you log in into member area, this is what you will see. You will see video library that Marco mentions. You will see Alpha Fibonacci modules with videos that you can watch 24/7. And what else will you see? That I dive into much deeper than just price. I dive into overall well-being of the trader. Because during such extreme market conditions, you as a day trader, You as a position trader, as the investor, must be especially well prepared. So please, listen and view what students do, because if they can do it, so can you. Historical volatility is here to stay. You must be well prepared. Please, take the events in the market seriously. Any questions, do not hesitate to contact me 925-257-4298 or info@fibinstitute.com. If these traders can do it, so can you.